Following on from Kurt's really interesting talk, we decided it'd be a good idea to have a panel session to talk about the state of privacy regulation and legislation. I'm going to ask the panelists to introduce themselves, but just very, very briefly, we have Paul Brigner from the Electric Coin Company. We have Peter van Valkenburg from both Coin Center and also a member of the Zcash Foundation's board, and Kurt Opsahl from the Electronic Frontier Foundation. Paul, do you want to start off by introducing yourself?
Sure, thank you. Paul Brigner, head of U.S. Policy and Strategic Advocacy for ECC. I've been with ECC for 7 months now, joined I think back in February, so about 7 months. And prior to that, I was working with a trade association for blockchain and digital assets called the Chamber of Digital Commerce. But for about the last 18 years, I've been working just on technology policy. A lot of that was on internet policy, broadband, and working with organizations like the Internet Society to help promote the internet globally. So I've been in the policy and regulatory space for quite a while now, and just am thrilled to be working with ECC to work on these issues directly. And as we'll talk about, I think we're making a lot of progress. So with that, I'll pass.
And I'm Peter van Valkenburg. Is my mic on? There it is. I'm Peter van Valkenburg. I'm the Director of Research at Coin Center. Coin Center, for 8 years running now, is a nonprofit based in Washington, D.C., dedicated to defending people's freedom to innovate using open blockchain technologies like Zcash. I'm a lawyer by training. Our day-to-day at Coin Center is educating people in Congress or in the regulatory agencies about how these technologies work, doing policy research to figure out where the technology has outpaced the law and left a gap, and then lobbying for preferred policy solutions to fill those gaps while ensuring that civil liberties are protected and the technology is allowed to flourish. We've recently transitioned our mandate a little bit more towards impact litigation. One thing I do want to discuss, because Kurt teed it up so well with his overview of the First and Fourth Amendment rights in this space. We're actually suing the government. Just a couple months ago, we announced that we're bringing a lawsuit against Treasury for the 6050I reporting requirements that were extended to cryptocurrencies by the infrastructure bill in Congress last summer. So we can talk a little bit more about that.
Hey everybody, my name is Kurt Opsahl. I am the Deputy Executive Director and General Counsel with the Electronic Frontier Foundation. EFF was founded in 1990 and has been working since then to protect your rights online, your rights to privacy, to free speech, to supporting the rights of people who want to innovate. We do this through impact litigation, through policy work and grassroots activism, and through producing some open source freedom enhancing technologies. And we're trying to make a brighter future by building a world we would want to live in.
All right, thank you all. And just a reminder that if you have questions for the panel, please post them in the relevant Discord channel. But let's start off, Paul. I think if you could give an overview. You've been with the Electric Coin Company now a while. I think you've probably had enough time to wrap your head around the challenge that you and we all face in this space. I was wondering if you can just give a quick overview of where we stand with regards to the state of legislation and regulation.
You bet, sure. Well, I think the primary challenge for a number of years has just been educating policymakers about this new technology and making them comfortable, where I feel that I've been able to step in and help ECC most recently has been with building just a policy community, because in DC there's these groups of think tanks, nonprofits, academics that really have a major influence. Two examples right here on how policy is developed. So I've spent a lot of effort trying to hold monthly gatherings to bring these individuals together and just talk about crypto policy generally and legislation generally. And every chance I get, of course, we talk about ECC. So it gives us some exposure, and I think it's exposing them to what we believe that obviously is very important is financial privacy and the ability to empower economic freedom with Zcash. Just to give kind of an overview of where we are, I think all this education has had a really big payoff, actually. I think that within the last year, we've seen some really thoughtful legislative proposals come forward, less than last year, last 6 months or so. And so I think that, on balance, there's been some really good things that have happened with legislation that's been proposed. Much of it, I believe, is very positive. And I guess it started out from the beginning of the year with the executive order. It's from the White House, the executive order ensuring responsible development of digital assets. So actually, the order was mostly about central bank digital currency, and it was directing many government agencies to produce reports on cryptocurrencies and different aspects of how they interact with the law and policy. So from that perspective, it didn't really move the needle on policy so much, but it was a recognition event. I would have preferred if it had not been so much focused on central bank digital currency, but focused on promoting the private sector innovation in crypto. So it wasn't perfect, but as the case is, as most things in DC, you have to make some compromises. So I think it was in general a good thing for the industry to have that executive level recognition. And within the next month here, we're going to get another batch of reports that are coming from government agencies. So I think this within the next 30 days or so, you're going to see a whole bunch of more reports that we will obviously be looking at very closely for how they're dealing with financial privacy and other issues. But just within the last week, we've had legislation proposed that would help clarify the CFTC, the Commodity Futures Trading Commission's role in overseeing digital assets. So I think that is, in general, a positive move for the industry to provide some clarity around that. That was a Senate bill that was introduced. There was a corresponding House bill that goes back to earlier in the year. So that idea is moving forward. There's a much broader bill that has gotten a lot of press. It's been proposed by Senator Lummis and Gillibrand. It's the Responsible Financial Innovation Act, and it is quite comprehensive. They have put this bill, introduced it, not so much to expect anything to move forward, but to provide a framework for what might be used in possibly separate bills, taking different parts of it. What we might see is maybe the basis for legislation in the next year or two. So there's been bills on tax, on de minimis exemptions. There's bills to fix some problems that have been introduced, and I guess that's where, while I've kind of focused on the good things, there have been some not so good things that have moved forward. And one of them that was already mentioned by Peter was what happened with the Infrastructure Investment and Jobs Act back in November of 21. And a couple of issues there. I mean, in general, the definition of a broker was too broad, but there was this section 6050I, which requires basically an unprecedented degree of financial surveillance. So I'm thrilled that Peter and Coin Center are taking that on to the courts. I know that's going to take a very long time, but sometimes that's just the way you have to work with this system. Other bad things that have come forward recently is, we've got some efforts to pull back some clarity that was given. Like Senator Elizabeth Warren is recently trying to pull back some clarity that banks had received from the Office of the Comptroller of Currency on how they could deal with digital currencies. So, there's some negative efforts that we're going to be pushing back on. But in general, I do think we're seeing something that is we're in a period that I would say is very special for crypto, where we're getting to the point where we're having lots of legislation proposed that is thoughtful, that is based on the staff and members of Congress being educated on these issues. So I would have to say that in general, I'm optimistic, and I think that's kind of what Kurt encouraged us to be earlier, is just optimistic about these issues, and I'll continue to be educating policymakers in DC.
Peter, you've got a fairly unique perspective of being embedded both with Coin Center in Washington, D.C., and being deeply involved with the Zcash ecosystem as a board member of the foundation. How do you think, or how do you perceive what's happening at the moment, and what do you think, the Zcash ecosystem, the foundation, ECC should be doing to position ourselves best to deliver, the impact that we need to deliver in order to protect the values that Zcash espouses?
Yeah, it's a good question. So when Andrew Miller was, gathering victims to help start the Zcash Foundation, he called me up and asked if I would serve on the board, and I've been there ever since. I've been there since the beginning, and it's something that I'm very proud of because I focus mostly on being a lawyer in DC, working on policy issues. I have this sort of envy of people who went down the computer science route instead of the liberal arts route, and so I get to live some fantasies by being associated with a good organization like the Zcash Foundation. But as far as policy, I'm very optimistic about the long-term vindication of our civil liberties, actually. Well, maybe not very optimistic. I'm optimistic. I want to be optimistic about that. I'm very cynical about the current climate in Washington, D.C., though. And the reasons for that are a few. For the last 8 years, we've been working at Coin Center, which of course is my day job. We've actually managed to obtain very good policy compromises with the relevant regulatory agencies. And so the things to point to here are things like the FinCEN guidance in 2019, which said who needs to do anti-money laundering checks, who needs to know their customers. They said we're not trying to regulate users of the protocols, we're not trying to regulate software developers, we're not trying to ask any of those people to know their customers. We're focusing on custodial intermediaries, companies like Coinbase. And I'm not a big fan of the Bank Secrecy Act and government-mandated surveillance of our financial institutions. However, it is worth noting that at least in this case, you're talking about a third party, a real third party. You're not talking about someone just using the Bitcoin network or the Zcash network. You're talking about a company that's onboarding people that probably needs to know their name and address for other reasons already because they need to know, how to connect a bank account to something that would allow them to then buy the cryptocurrency. And so fast forward all the way up to the 2019 FinCEN guidance, they went even further. They said, and I like to think in part because of our advocacy efforts in DC and working with the staff at FinCEN who want to get this right, they said even a multi-sig key holder, if they don't have sufficient keys to transact, is not, under our current rules, obligated to register as a money services business, obligated to know their customers. So actually a comprehensive piece of guidance that went deep into the technical weeds, which is great in this case, and said, look, we're here to regulate and to surveil, if you will, people who use custodial services. We're not here to regulate software developers. So I put that up as a preface. Up until 2019, things are quite good. Now, since then, things have been slowly, that policy compromise has been slowly eroding in various steps. So the things I want to point to is, in evidence of this transition from, okay, we'll regulate the custodial choke points, just like we do in the traditional financial institution, switch to regulating potentially software developers and individual users. What's happened? The infrastructure bill passed by Congress last summer loosens the definition of who is a broker and therefore needs to do reporting about people for tax purposes. Maybe loosens it enough that it could cover someone like a miner or a software developer of a decentralized app or something like that. We went back and forth many rounds. Lots of members of Congress said, actually, we do not want it to apply like this, but we ultimately didn't get the compromise we wanted to make it clear in the law text itself that this wouldn't apply to software developers. We had a lot of support from great senators like Senator Wyden from Oregon, who were trying to fight for us, but we lost. This is one of our first, I think, big losses, big L in the column. The other things to watch out for, about 6 months before that, in the outgoing Trump administration, Secretary Mnuchin, Treasury Secretary, tried to push a last-minute rulemaking. They were already lame duck. They only had about 15 more days in the administration. And they pushed Treasury to say, look, we're actually going to now require exchanges to know the name and identity of the unhosted wallets to whom their customers are sending or receiving funds. That's a huge step in a bad direction for obvious reasons. If you respect the Fourth Amendment, the limits on warrantless search and seizure, you say, okay, well, there is this third-party doctrine which says that there's a carve-out once you hand your information over to a third party voluntarily and it's held for a legitimate business purpose in the Smith and Miller cases that Kurt went over. But Carpenter said, look, there's certain data that a third party, if they hold it, it's not for a legitimate business purpose and it wasn't voluntarily provided, like cell site location data in that case. Exchanges like Coinbase and Kraken have absolutely no business knowing the name and physical address or social security number of unhosted wallets to which their customers are sending or receiving funds. Why? Because the people who control those unhosted wallets are not the customers of Coinbase or Kraken. They've never agreed to any disclosure of private information, and it could not possibly be held for a legitimate business purpose. So the Mnuchin rulemaking, by saying Coinbase, other exchanges need to collect this information, was basically extending its surveillance gambit, I think, in an impermissible way. We fought that and we actually won. We slowed it down. It's still on the regulatory docket. We'll see what happens, though. I'm optimistic about that one, but that was worrisome. I'll go real quickly through the other ones. The SEC just, 3 months ago proposed redefining what it means to be an exchange for securities law purposes. And in that definition, they said instead of matching buyers and sellers using some sort of rule set, you are an exchange if you make available communications protocols that allow buyers and sellers of securities to find each other. Making available a communications protocol is publishing speech. It's a really awkward, legal, bad way to say it, but that's basically what they're saying. We wrote a comment saying you can't go this far. Code is speech. Speech is protected on the First Amendment. You can't force people to register before they do that as an exchange. So we'll see how that shuffles out. We still haven't gotten a final rule from the SEC on that. The CFTC bill in the Ag Committee, I agree, Paul, is a good step forward in a sensible regulatory regime for custodial cryptocurrency intermediaries. Unfortunately, the current definition of who would have to register, and it's a mandatory registration regime rather than the House version of this, which is an optional registration regime. The current definition of the Senate of who must register could be extended potentially to cover things like decentralized exchange, software developers. They did put in a carve-out, I think in part because of our conversations with the authors, for miners and transaction validators and stakers, and that's good, but I think it needs to go further. So these things, infrastructure bill, the SEC's exchange definition, redefinition, the Mnuchin rulemaking, the CFTC bill and the Ag Committee, as a bright spot, but still one with risk. I think these signal a very big change that's happening where regulators and lawmakers are realizing that the choke points that they used to rely on in order to surveil and control the financial system are no longer as essential to transactions. And therefore, there's a desire amongst some who maybe prioritize security over privacy and liberty to start regulating software developers as those choke points, or even regulating users of the network themselves. And it's basically going to be our job to go up and say, A, that's terrible for an innovation policy standpoint for the US, but also it's probably unconstitutional in most of the ways that you'd want to do it. And so I'm quite worried right now. We're at a key sea change moment.
Okay. And Kurt, obviously, EFF doesn't focus primarily on cryptocurrency, but I feel like some of the challenges that we are facing in the legislation and regulation front have had previous parallels. One of the things that I think is particularly worrisome is what I call shadow regulation, which is where unofficial pressure is brought to bear on regulated entities like banks, like credit card networks, like exchanges, to implement policies that the policymakers, the regulators, the legislators would like to see implemented, but are unable to actually codify into a law or a regulation or a rule because someone like Peter would step up and say no. What kind of wisdom can you share with us based on the ESF's experience of this sort of battle?
So you raise a lot of good points there, which is that shadow regulation, definitely an issue, and this is a little bit what I was talking about in the last session in the talk, is that in a number of cases when you had choke points, those choke points where senators would write open letters to them or put some pressure on is do this thing. It is not something that they could constitutionally require, but nevertheless they can still say that it is. And then shadow regulation takes it that step further, which is also I have regulatory authority over you, so you better not, they may not say it explicitly, but there is at least a pressure that if you don't do what we think is the right thing, you might get onerous regulation which itself could be challenged, or it could be regulation which is just making it more tough for you, and it has nothing to do with the issue that they're putting the pressure on, and that's the most dangerous one, because it may be difficult to tie that with the pressure. Now, I would say, what can you do about this? Well, I think one thing is decentralization can really help with this, that there are less singular or duopoly type choke points that can be subject to this pressure, and sort of a larger ecosystem is more resilient against some of this. Another thing to do about it is to put some pressure back on those companies. So, in my last session, I went through a number of examples where there were activities done by financial institutions that were engaging in activities that wouldn't be constitutional if they were laws, and in many cases, while there was pressure on it, it also put the opposite pressure to say, like, okay, but actually you shouldn't be the morality police. Oftentimes it comes up in a moral context, to put some pressure on some of these entities to, if they cave too quickly or cave too much, that they will have to explain that to their users, explain that to the public at large, why they are doing it. But I think ultimately we want to make it so that there are enough entities out there that are strong entities that have a voice, that this becomes a difficult thing for someone to shadow regulate about.
I like to think the shadow regulation thing is somebody saying, hey, that's a really nice, profitable business you've got there. It'd be a shame if something were to happen to it because you supported, cryptocurrency.
Yeah. It's also abhorrent from a rule of law standpoint. If you believe that law should be clearly explained in the code, anyone should be able, the legal code, not the software code, anyone should be able to read them and understand, where the line is. When would I be running into territory where I would suddenly be on the hook for liability, criminal or civil or what have you? The Senator Warren calling for the OCC to withdraw previous interpretive guidance about banks holding crypto is actually a good example of this. Like, why is policy being made through letters from a senator to an agency, and also by an agency simply publishing their own interpretation of the law? Neither of these are robust rule of law type processes where there's clear statements of what should happen and shouldn't happen, whether you're a bank or a customer of a bank. It's all done through basically how they write the handbook for banks about what banks are allowed to do and not do. And then the opinions of the bank examiners when they go into the bank. You probably shouldn't bank people who use Zcash because you're probably banking the wrong people then. And this all happens behind closed doors in informal opinions, in face-to-face conversations that the democratic constituents of the government never get a chance to even audit or look at or comment on. It's abhorrent.
I'm feeling less and less optimistic.
We've had a great question come in on Discord. What are the strangest misconceptions that lawmakers and politicians have had about cryptocurrency? And let's start with you, Paul.
Strangest misconceptions. Wow, that's a great question. I don't know if I have anything off the top of my head that would be, what. I guess I don't know if it's strange, but it's a misconception that I fight with constantly, is that there's something in the nature of blockchains that makes them all transparent. And that just drives me nuts. And I have to watch for this language constantly. And we deal very close with the Blockchain Association and other groups that may allow us to review some of their comment letters. And I see this language even in some of those documents. And I have to, of course, get that corrected to say that, well, no, there's absolutely nothing in the nature of blockchains that is transparent. They don't have to be, by the way. And of course, it gives me a good opportunity to tell them about Zcash and zero-knowledge technology.
I'd say one of the strangest ones we had, and this was more 2014 when we were just getting started, was we did talk with a staffer, I won't say from what agency or political body, who wanted us to help their boss understand why the emergence of Bitcoin was not a clear indicator of the end times because it was a one world currency that was basically the mark of the beast.
Oh, that's a good one.
That's a literal answer to that question. That was a very strange meeting. I've never had a meeting that strange.
Kurt, how about you? Have you come across any strange?
I can't think of anything like, it's not so much there was a misconception. I think there have been times where it's just no conception, like starting out, well, it's this weird thing, I don't understand it, which is actually, if they're having that conversation, you're already ahead of the game, that there's someone who's trying to understand it. And in terms of like looking at some of the legislation, one of the areas where I think there are some misconceptions that are embedded within it is sort of not having an understanding of how open source development works, that there are like, imagining that software is being made by a single entity where everyone who's working on the software sort of works at that entity, and not imagining that like people would come along and write a piece of code, put in a pull request, like individuals, and so they would have the sort of the notion that they could regulate the software development without having this conception. This would, all the responsibility that they might put on a software developer would mean that like the cost of putting a bit of code into something would mean for the rest of your life you'd be more responsible for how someone else might misuse this, and is totally fundamentally incompatible with a open source like community development model. And so I guess that's a misconception, but it's more of a non-conception.
Well, unfortunately, we don't have much time left. We've got a packed schedule, and we had to squeeze this session into 30 minutes. But just very briefly, again, starting with you, Paul, how can we, the broader Zcash ecosystem beyond ECC, how can the foundation, how can other organizations that are part of the ecosystem, how can the individuals in the ecosystem help with this push to make regulation and more friendly, and to protect against negative and hostile legislation?
I think Kurt did a fantastic job of outlining that process earlier. So I would refer to all of his suggestions on how to get in touch with your policymakers and contact them and express your opinions to them. I mean, I think that is critical. I do think it is effective. And just to continue to tune into these issues, I think the industry so far, like the major industry publications, have done a great job of making sure that the policy issues are given headlines and allows everyone to be educated on what's happening. To what Peter said, I just want to also agree with this being a very critical time that it could be very dangerous, because I think we haven't yet seen legislation that is starting to focus on DeFi. And that's next. There's almost no question that that's coming very soon. So it's going to be really important for the industry to focus on that, because that kind of legislation often refers to smart contracts, it refers to protocols, it refers to interfaces, these things that would quickly lead to regulating software development. So we are at kind of a very critical point, and yeah, I'm just glad you're on top of these things, because he's doing the heavy lifting, obviously. He's right there on the front line, so I appreciate it.
So I would say the best thing that the community can do is support nonprofit organizations that are here to make a difference. The Electronic Frontier Foundation I've been inspired by since I first decided I wanted to go to law school. For a while, I really wanted to end up working there. I still wouldn't mind it, but Jerry, the executive director of Coin Center, found me and said, hey, we want to be like the EFF, just Bitcoin specifically, because there's so many questions right now. And I was like, I'll take that job, I'll do that. And we've worked closely with the EFF in the past on multiple different issues, going all the way back to the BIT license back in 2013, 2014. These organizations are very important because they stand up for the rights of users and developers, not for the rights of corporations. Like the EFF, you guys might get donations from Google or Facebook. You probably did at one point, but that's not buying anything. And it's the same with Coin Center. We have donors that are some of the companies in the space, but they don't get any say in our agenda. We're here to be mission focused, to defend people's rights to build and use these technologies. We've been very parochial in talking about the US policy here exclusively. There's some folks who I've been talking with recently who have been trying to build something like an EFF or Coin Center, more crypto specific like Coin Center in Europe. So if you're European and you want to give to an organization and talk to people in Europe who are working on policy issues, come see me afterwards, because there's big issues there with FATF, which dictates anti-money laundering policy globally. and with the anti-money laundering directives, and with MiCA, which will regulate a lot of virtual currency activities or digital currency activities.
Kurt, do you have anything to add to your previous?
Okay, thanks to you both for the shout out to EFF, and I also want to give a shout out back to you. Like what I said earlier was get informed and then get involved. These are the people who you're getting get informed from. So look to the publications, the organizations that are working on these issues, read about the issues, and when you find a thing where in your jurisdiction something important has happened, that means you can make a difference by getting involved, reaching out to your legislators, and giving your opinion, so you can help.
Okay. Well, let's leave it there. Thank you very much to you all for coming and participating. I have a sneaking suspicion that it might be a good idea for us to have a session like a virtual session along these lines, maybe on a quarterly basis. So I think we'll get the ball rolling on trying to organize that. 'Cause I think it's a topic that it's a constantly evolving landscape. We need to keep on top of it. I think we need to keep updating our community and how they can help and what the latest developments are. But listen, thank you all for taking part. Paul, Peter, Kurt, thank you.
Thanks, Jack.
Thank you.